Hello and welcome to Ticker Tapes. Today we're taking a look at the world of high-growth stocks. We haven't had much good news to report recently as far as the price performance of high-growth stocks has been concerned. However, we may have turned a corner because we saw a concerted rally into last Friday's close, and that rally was led by growth names. The table below shows the top-performing NASDAQ 100 stocks in Friday's rally. As you can see, there were some decent gains, although the gains need to be viewed in the context of the stock's longer-term performance, so we are far from out of the woods yet. However, the fact that 77% of NASDAQ-listed stocks made gains on Friday says something about the breadth of the rally and the swing in sentiment behind it. Sentiment changed because the Federal Reserve appeared to dial back its appetite for large interest rate rises, though it didn't rule them out completely. We can get a handle on just how hard sentiment for growth stocks swung last week if we consider that as of May 10th, just 5.88% of NASDAQ 100 stocks were trading above their 5-day moving average. However, by the time we closed on Friday afternoon, that figure sat at 90.19%. If we look at the same metric among the biggest names in tech and the growth stocks within the S&P 500 information technology sector, we find that on May 10th, just 2.66% of stocks in the sector were trading above the 5-day moving average. But by the close on Friday, that figure had leapt to 86.66%. The biggest story, or stories, of the week once again featured Elon Musk, who appears to be having second thoughts about his takeover of Twitter. Ironically, he shared that news over the social media platform, saying that the deal was temporarily on hold whilst Twitter provided evidence that spam and fake accounts on the service were less than 5% of users. Twitter shares plummeted by 11% on that news. Elon Musk would later say that he was still committed to the deal, however, the damage was done. It also emerged that Musk may have inadvertently broken the NDA agreements he signed with Twitter by revealing details about Twitter bots. Mr. Musk was also said to be seeking alternative funding arrangements to finance the Twitter takeover, after his plans to pledge a large quantity of Tesla stock against a multi-billion-dollar loan came under fire. He is now thought to be exploring the use of high-coupon preferred equity instead, effectively a loan that's dressed up as interest-bearing stock. Tesla stock rallied on the news about Twitter and finished Friday's session up by 5.71%. However, the issues that the company faces were made clear in research from Bernstein, who highlighted declining market shares in EV sales. Bernstein believes that although Tesla is still the market leader in the sector, it needs to innovate and introduce new models to compete with other manufacturers and their newer products.